Hey there, I'm Tom Leonard. I'm the host of the Gamers Change Lives podcast. Now, when it comes to esports, I'm definitely not the expert. I'm more the explorer. The goal behind the podcast is to hear from esports entrepreneurs and others about how esports can create jobs and maybe inspire others to do just that. Our tagline is play games, create jobs, change lives. Now, in season 2, we're talking with experts in sponsorship, in investment, in merchandising, all the ways that an esports entrepreneur can make money because it takes money to create these jobs. We call this season Follow the Money. Today, I'm really honored to have Mohamed Karar, who's talking to us here. And he's a venture partner at Launch Africa, which we're going to hear all about. Welcome, Mohamed.
Thank you, Tom. Nice to be here.
So where are you speaking to us from?
Right now, I'm in Cape Town, South Africa.
Got it. Now, are you, is that where you live? Do you spend most of your time there, or do you spend some of your time here in the U.S.?
I do spend a lot of time in the U.S., usually 3 months or so out of San Francisco or the Bay Area, and the same for South Africa. And the rest of my time is kind of divided around the continent. Uh, some of the other big chunks are in Egypt. Egypt tends to be a big market for me in the firm to cover. And then also Sudan is my home country where my family lives. And obviously all over the continent as well, as I do source a lot of deals on the ground.
Oh, it must be a lot of fun. I mean, you get to see all kinds of places for a reason. So, and I'm sure that people like to see you show up.
Yes. Usually entrepreneurs do enjoy it.
Yes. So can you talk a little bit about how you got into, we'll talk about Launch Africa in just a minute, but how about yourself? How did you get into venture capital? How did you get into financing?
So I didn't study finance or anything really related in college. I actually went to school to become an engineer. I studied industrial engineering. And throughout my college career, I did a lot of internships and co-ops and really took my time to get some work experience. So first it started working in your traditional engineering setting, kind of an aerospace contractor to the US military, and then eventually transitioned into consulting, still within the engineering field. And then eventually I ended up in Goldman Sachs. Um, which kind of gave me just the basic knowledge of finance, so on and so forth. Eventually, I met someone. I met a venture capitalist. His name is John Henry from Harlem Capital when they were starting their own firm just a few years ago. And once I realized what venture capital was, I knew that's what I wanted to do. And after a kind of a year of just telling everyone around me in my networks that, hey, I want to be a venture capitalist, and maybe in Africa, after a while, I was connected to Zachariah George and Janae Duplessis, who are the general partners at Launch Africa. At the time, they were just starting Launch Africa, kind of doing it as a side hustle for myself and for a lot of people on the team now. And I ended up joining them alongside my colleague Kartik, and we were the first hires. So it's really amazing to see how the firm has grown within the last 2 or so years, and I'm really grateful to be here.
So what was it? I think that's really interesting. What was it that you said you saw VC and you're like, hey, that's something I want to be doing? What was it about the industry that was really attractive to you in particular?
Yeah, I mean, it's there's a lot of very interesting things about VC. I mean, one thing is that as someone as an early in my early 20s, I was very curious. I wanted a lot of exposure to a lot of industries. And VC did give me exactly that. I get a lot of insights into markets. The other thing is that I was able to kind of live in the future and see into the future with technologies. When we're doing due diligence, when we're looking at these products, when we're meeting with these entrepreneurs and companies, we actually try as much as we can to use some of the things that they are building. And especially in areas where VCs are able to invest in deep tech and kind of really technical new products, you get to live in the future a lot of times. And I thought that was very fascinating.
I'm going to remember that term, live in the future, because it really does make sense. I mean, because that's what you're doing. You're not investing in things that were popular back in the 90s. that was someone else's job. Is it common for people to go from consulting into venture capital?
It is common, but in general, I think I've seen people from all sorts of background go into venture capital. Um, especially if they're going to go into a VC firm that invests in a sector focus. If you are coming from that sector, regardless of where it is, I mean, if you're going to work at a VC firm that invests in educational technology, your background could be a teacher and it would be just the right fit, right? Um, and the same thing for consultants. So consultants are largely generalists, so they can end up in generalist fund, or if they were sector focused, then they can end up in that sector focus. And I'm sure it does help, but it's not the only way.
Yeah, I remember we were talking to Dave Harris in Australia, and he was talking about working for BCG, and he was like doing all this mining work. He was like, it was like, he thought, well, how's this ever going to apply to anything in the future, sort of thing. So, but you said that you didn't have a finance background, but now you're in the finance world. Where did you learn the finance side of things?
Yeah, so the finance side of things I learned throughout internships at Goldman Sachs in the US. That's where I really learned. But one thing that I learned at Goldman Sachs is that actually none of the people who do study finance end up learning what to do once they get on the job. Maybe they will have kind of 5%, 10% background or idea of what's going to happen, but for the rest of it, practically you do learn on the job. So at least for Goldman Sachs, when they were doing their hiring, I mean, I've had peers who studied art history. I've had peers who studied Latin in college, right? And for the most part, they didn't really quite care what you studied as much as they cared about you being someone who can work in such an intense environment at times, or people who can take feedback without having their ego interfere to be able to learn and progress further in their role. So these were some of the qualities they were looking for. And for myself, I found that to be very true. Someone not from a finance background, I did go into Goldman Sachs and ended up learning so much about finance generally. When it comes to venture capital, you don't really, there's not really a course study for venture capital yet. I mean, I don't even think in postgraduate or in graduate schools there's anyone really teaching venture capital quite yet. So even for VC, I mean, it doesn't even matter, what you study anymore. But some of the similar qualities I've seen breaking into traditional finance are the same ones I see here in venture capital.
What you're describing sounds a lot like what you do when you were talking about identifying people, the Goldman Sachs people, for example, in your example, you're saying, well, they were looking for people who had certain qualities. And it sounds a lot like the same kinds of things that you're probably looking for in founders. It's like the kinds of terms that you were using. I can just see you being able to like, oh yeah, this is going to work. No, this person is not really coachable. It's like, no, they're just going to take everything in the wrong way and everything. Do you find that there's some similarity there?
Yeah, 100%, 100%. I mean, if you're making a startup, the odds are you are not going to figure it out the first time, right? It's going to take some humbling along the process. And if you can internalize that well, then you are likely going to progress.
So when a venture capitalist is looking to invest in someone, are you investing in the founders as much as the concept?
Yeah, so it depends on the stage of investment, right? So if you're investing in the very, very early stages, then the founders and the team themselves hold a lot more weight in the decision making. If you're investing in the later stages, Series B, Series C, Series D, so on and so forth, the team still does make a difference, but not as much as now you have a lot of data from the business, a lot of technical metrics to follow. So in the industry, people always say, in the early stages, it's more of an art than a science, and in the later stages, it's more of a science than an art. But throughout the spectrum, both are still equally viable.
Could you describe? You're just saying all kinds of great things I want to write down. Um, could you describe a little bit of the whole investment ecosystem out there? Because you're talking about seed and venture capital and all this, and mainly, for my education as much as anyone else's in the audience, could you just kind of describe who some of the players are and what roles they occupy?
Okay, and some of the investment process
Yeah.
between founders. Yeah, I mean, so when VCs and founders come in contact, um, there are quite a few ways. So either a VC finds a founder and they reach out, or a founder reaches out to a VC, or someone in the network in the ecosystem is usually referring or introducing someone to another person, which usually tends to be the case. Sometimes we'll see companies, whether on their social media or on websites or on news articles, and then we may reach out. But there are really a lot of ways that they can come in contact with each other. So the way the process goes is we'll usually have an introductory call. Um, and even before the introductory call, we've likely reviewed the pitch before we can have a call. I wish we can take calls with every founder that we like, and we look at the pitch deck that comes our way, but that's not feasible. As at least for us, we're a generalist fund. We invest in the early stage, and we invest all over the continent, which opens the floodgates to founders who want to raise. So we try to look at as much as we can. But the ones we get the chance to look at, we have an introductory meeting. If it goes well, then we'll probably have another meeting with follow-up questions. And these are usually just with one VC, the one that has found the deal or sourced the deal. And if they get through the second meeting, where some of the follow-up questions are answered, then I'll bring on the rest of our team, and we'll start talking. We'll get access to the data room. We will review everything. And then if they go through our pipeline reviews, every time that we filter to make it smaller, we'll take them to investment committee. So investment committee is where we make the decision on investments. We'll have an investment committee that has members who are very experienced in a variety of sectors, and they kind of watch over us as we make decisions for the protection of our own investors. So this investment committee will usually happen for us every 6 weeks or so, and we will bring maybe 6 to 8 deals in total. So in that period of 6 weeks, when we're deal sourcing and including some of the other deals that maybe didn't make it to previous investment committees, these are hundreds and hundreds that we go through and filter out until we get to the very few that will end up in the investment committee. But in general, the whole process usually doesn't take more than that 6 weeks kind of period if the startup is ready.
Who's usually? And I'm not trying to get inside information on where you work, but typically, who's on the investment committee at a venture capital firm?
Yeah, so this depends usually on the VC firm.
But I guess the reason I'm asking here is if you're a founder and you're like, okay, someone's like said yes, and they're you're going through the thing. It's like you're going through the pipeline as you describe it. It's like, but really, it's the investment committee is the decision maker, right? Because they're the ones that in the movie business give the green light to the project.
Yeah. So they give the final check. The VCs are the ones who will bring the deals and who will take you through the course. But the investment committee have the right to veto any investments that we want to make at the very end, and throughout their experience, they know that this is something that might be challenging or doesn't quite fit our mandate. The investment committee for us is public information. If you go on our website, you will find all of our investment committee members and all of our team members. For some VC firms, the investment committee is in-house, so we'll just be the partners, and the team itself will just kind of vote on the deal. For other VCs like us, we have an investment committee that is a little more removed from the team, and which we like because it kind of adds an additional layer of accountability to the investments that we make.
So what's interesting here is because the way the concept is, it's like your role as a venture partner there is to go out and find deals. I mean, you're looking for opportunities. It's not like you're trying to say no to everything. It's like, no, you're trying to find things that that you think will be a good deal, and things that you can move further down the process internally. So it's like, I mean, you're looking for winners. I mean, you're looking for good deals.
Yeah, yeah, 100%. I'm looking for good deals. I mean, in the VC model, we are not looking for average returns. We are looking for a few home runs, right? That's how VC works. The reality of venture capital and startups, most startups are going to fail. The overwhelming majority is going to fail, and that's okay. Because the ones that do make it, they make it at such an outsized scale. But for us as investors, we are not looking for good startups and get an overall good average return on investment. We are looking for a few home runs that will just, the startups that just knock it out of the park. And that's what really provides outsized returns for VCs and investors.
How many deals do you do a year?
How many deals do we do a year? So we've been investing for 2 years now, and we have done just around 125 deals. Um, so a year we are doing, 70, 60, 70 deals. Um,
So more
that
than one
we
a
are the
week.
most more than one a week if you average them out, yes. But we are kind of a special case, and we are the most active investors on the continent right now in terms of early stage startups. And we are more active by quite a margin than the rest of other VCs. We were able to raise quite a bit of funding, and the investment period, it remains the same for our fund.
Where does a venture capital organization, where do they get their money?
Yeah, so we get our money from our investors are called LPs, which stands for limited partners. So our limited partners, they come from all over the world. We get a nice chunk from Africa here on the continent. We get a nice chunk from Europe, from the US, from the Middle East. Really, it's all over a mix. Um, Here in Africa, a lot of VCs tend to get their monies from DFIs, kind of like the IFC, an
What's a DFI?
organization. A DFI, it's a direct foreign investment. But I guess the acronym doesn't quite really show the kind of organizations, but it's like the IFC, or like the World Bank, or some of these development agencies, or like Proparco in France, so on and so forth. Some of these development agencies who are interested in the development of the continent will invest in VCs, so that they can deliver money to, or deliver capital to startups. Um, globally, and especially the really established VCs who've been investing in a while can get their money from pension funds, from their investment strategy. For us, our when it comes to LPs, most of them are just HNIs, which are high net worth individuals or family offices. For our fund size, relatively globally, relatively we're a small fund, and so it's a lot easier to raise from high net worth individuals and family offices, as they can deploy anytime at will, whereas some of these larger institutions, it might take a few years to raise that kind of capital. Whereas for us, it took significantly less time to raise, as we're dealing mostly with individuals and or family offices. But we do have some people who represent organizations. A lot of them, they're like, okay, we want to invest through our organization. It's going to take some time, and it might be your second fund, but we will invest in our personal capacity to kind of keep tabs on the startups and technologies that are coming out of. But there are a few organizations. We have other VCs who do fund funds. Usually, the ones who invest in a later stage. Sometimes they will have a bit of capital that they will invest in another fund, just to kind of cover some of the early stage investments, so they can track when they get to their stage, and they'll be able to invest in them. And as well as we have a bank based out of Germany that had also invested in us.
Do some of the governments, the actual governments of countries in Africa, do the same kind of investing?
Um, yes, but that's more of a new thing, and I only know of two examples right now, of ingressive capital with the Nigerian Sovereign Wealth Fund, and Silicon Badia, in Egypt, with an investment from a Tunisian fund of funds. But I think it will be more increased. So right now we are raising for our second fund. And we are engaging with a few governments here on the continent and in the Middle East as well, um, who may potentially come on in, but this is something that is still new. Yeah, but it's exciting. Usually they'll invest through sovereign wealth funds or just kind of investment arms for the government.
Yeah, that's one of the things you read about so much in esports is how much the Saudi Arabia government there through their different organizations are putting an incredible amount of money into esports as an example, and other countries are doing similar things. Saudi Arabia just seems to have more money to walk in with, so they get the most of the attention. Which and they've also been some really big names out there. So, but it's interesting because they kind of planted a flag. It's like, yes, this is a road we want to go down. It's not like,
Yeah.
oh, let's just make a couple of little investments. It's like, no, this is esports is something that they are going to be involved with over the long period.
Yeah, yeah, definitely. Yeah, we will see a lot more investments coming out of the Middle East, just due to the nature of the economic um, situation we have globally right now. So usually, traditionally, your LPs when they invest in venture capital funds, they will liquidate some of their public market stocks, which are not doing really hot right now. So no one is looking to sell. But in the Middle East, their source of funding usually isn't public market stocks. It will be from other things that are not so much affected or maybe a little inelastic to the price of public market stocks, especially U.S. stocks at the time. So I will see a lot more VCs, especially in our region, focus on raising funding from the Middle East.
No, it's just interesting because it's like it's this balancing act. It's like you someone there has to go out and get the money, and someone has to
Yeah,
figure out where to give it, sort of thing. And that's
yeah,
that's the role of that everyone does if it works if it works out well. That's great. Well, I wanted to talk a little bit more specifically about Launch Africa, but because you have such a great story there with what you guys are doing with Launch Africa. What kind of investments are you making?
So we make early stage startup investments. Anything before Series A is usually what we say, but we do have a couple opportunistic Series A investments. We are sector agnostic, so we have invested anything um, between marketplaces, fintech, health tech, insurtech, gaming, and really anything in between. We invest Pan Africa, so we invest in any African country. We're truly Pan African, with about 21 countries so far. And some of those countries, we are the very first VC investor in the history of the country. Um, so yeah, we're sector agnostic, early stage. The startup has to be scalable, asset light, and all those other usual things you find from VCs.
When you talk about asset light, what does that mean?
So asset light means that if you need to scale, you don't need a lot of buildings, a lot of equipment, a lot of machinery, or even cash. Cash is an asset, right? You don't need a lot of cash to scale. So things like software, for example, they can scale very easily across borders, and people without much infrastructure. So that's what we mean when we say asset light and scalable.
Got it. Got it. So, what do you look for in a particular investment that's going to get your attention? Are you looking for a particular size, time in operation? Are they making money? Are they good founders? What
Mm.
kinds of things are the things that you're looking for?
Yeah, so there's a lot of things that differ based on the sector and the business model that can be evaluated differently. But there are some general things that we look for. Obviously, as BCs, we're looking for home runs, so we want startups that are addressing a very very large market size. Right. So every once in a while, you'll see that there are some startups who are targeting a market size that is not that large, that even if they conquer half of the market size, it's not quite venture scale type of returns. So we are looking for really, really massive markets that even if you only penetrate less than 1%, you are going to be quite a successful company. Um, Other than market size, we're looking for the timing of the market as well. So there are a lot of examples of this. A few years ago, Vine was really popular as short form video social media, and they closed their doors. And then now you have TikTok, who hit just a little better timing with the pandemic, and now they're a very successful company. So timing of the market works out a lot. In terms of the heavy regulated industries, kind of like fintech or insurtech or health tech, the licenses go a long way. Having a license or approval with the regulator that you can do this in this very heavily regulated space. Other things that matter are if you're doing POCs, proof of concepts, or pilots with companies, especially large companies. If you are a B2B or a B2B2C startup, in general, we do prefer B2B startups over B2C because it's just a little easier to scale and a little easier to exit. And those are usually the ones that are winning first or advancing first in the kind of frontier markets or in a lot of Africa. And then we're looking at the founders. We're looking to see if there will be co-investors who go into the round with us so that we're not the only investor supporting the startup. And we're looking, usually this is not always the case, but usually we want to invest startups that have revenue that is recurring in nature. So not all revenue is created equal. If you're having one-off kind of revenue agreements or kind of invoices that are just one time or kind of consulting agreements, that's not the same. It doesn't have the same value as a recurring subscription type of revenue. And yeah, these are some of the general things that we can look at the cross sector.
How important is the regulation side of things in the deals that you've been doing there? Is regulation, do you think, a bigger deal in Africa than maybe in other parts of the world that you're familiar with?
Yeah, so regulation is quite a big deal. I would say not just Africa, more so emerging markets, pan-emerging markets. Um, in the U.S., the attitude towards startup is a little different, even than other countries in the West. Is that the law in the U.S. is set up in a way for technology that if there's nothing about it, if it hasn't been discussed and it's not addressed in the law or any policy, then you can do it, right? Oftentimes in the markets outside, it's the opposite, right? It's that if it's not in the law, if there's no policy about it, then you can't do it until it's addressed, right? And for innovation to happen, a lot of startups do operate in the gray area, and there are success stories of that, but there are also horror stories of that, where startups have to shut down because the regulators have finally caught up with the policy and just kind of shut down or decided that what they're doing is not okay with them. But these days things are changing, so we work with a lot of policymakers and regulators across the continent to make sure that they are aware of what startups are doing in our portfolio or outside of it, that they're okay with it, or to kind of understand the trajectory of where the regulation is headed and if it aligns with them. So the communication is a lot better now, and there are startup acts that have been enacted across South Africa and recently in Nigeria and in the DRC, Senegal, Tunisia, etc.
Yeah, just think of how complicated it gets. I mean, how complicated it gets if you're dealing with a regulation in one country. But then you said 21 countries, and each one is going to have just a little different wrinkle that could make or break what it is that you're doing. And so a founder that comes knowing the regulation in their particular universe has got to really be appealing.
Yeah. Most definitely, most definitely. If they're having, especially at the very early stages, if they're having their licenses in heavily regulated industries, it goes a long way for us, and it's quite attractive.
What kinds of questions do you ask a founder that comes to you? What are the kinds of questions they should expect from a VC starting out?
Um, Well, usually the questions are quite contextual, depending on what we're looking at. Usually when they're pitching, I'm getting so curious about different things that they're saying. Um, But some of the kind of questions are, fall in line with the same things as what I was saying earlier into what we look for in investments, right? So, are you licensed and regulated? If they're in a regulated environment, what kind of revenue? Who do you get it from? Do you get it from businesses, from small businesses? Do you get it from customers? What's the cost of acquisition of the customer? What's the lifetime value of the customer? What's the ratio of that to each other? So, do you have room to scale? What's your runway? What's your burn rate? How much money are you spending per month? If you raise this amount of money, how long will it last you? What are you planning to do with it? Where's your holding company? Which other investors are you discussing with? What are your markets of expansion? So there's a lot of questions that obviously we go through with our founder. There are some checklists that we'll run through to ensure that some of the basic things are met, but usually they're very contextual.
Yeah, I remember listening to Zachariah George talking on another podcast, a Stanford podcast, and he was saying if he's talking to someone and their answer is, "Oh, I'll have my finance person get a hold of you," he said that's not the answer that he was looking for with them. So what are the kinds of questions that you'd like to hear the founders asking you?
That I'd like to hear the founders asking me. It's always really nice if there's a founder that we have invested in that has found some kind of point of synergy or a way that they can collaborate with another portfolio company so that they can partner with each other, or so that they can cross-sell to each other or offer services to each other. I think it's quite impressive, if they're looking at our portfolio and then they know that there's benefit to all three of entities, and they're the ones creating that initiative. So for us, we do have a portfolio team, and our portfolio team is constantly looking for linkages in our portfolio, and between our investors as well, and how they can collaborate and mutually benefit each other. So sometimes the startups kind of pick up on their own, and that's always really nice to see.
Do you organize it in a way that they can connect with other organizations in your portfolio?
Yeah. So they know. I mean, our profile is publicly available on our website. Anyone can take a look at it. But yes, our founders do develop a sort of community within them. And there are investments that we have made where, in addition to the kind of economic prospects of the startup, we are also backing the startup because of what they can offer to our portfolio, in a kind of privileged or incentivized access. So we're a high volume fund. We have a very large portfolio, so we want to make sure that the portfolio is not made up of random companies, that it is constructed and that it is allows for growth within each other. So we've kind of created like just a tiny ecosystem within our fund.
Now that makes makes a lot of sense, because if someone's already in Zambia doing something, when someone else is going to do something in Zambia, it's like, hey, go talk to this person. It's like they know, depending on the industry, it's like they're going to be ahead of it there. So, how involved is Launch Africa in the startup itself? Because, like we always say, you're not just writing checks. It's like, so how much interaction would a founder find after doing a deal with Launch Africa?
Yeah, so that largely depends on the founders. So some founders have on their cap table a lot of investors that are institutional. Some founders have less institutional money and maybe more angel money, and so they would like a little bit more help. But some founders already have very healthy support systems, so we end up needing to support them not as much as some of the other founders. But for us, we're always available, so to help us as much as you need. So there are founders that I will talk to on, quite a regular basis. Sometimes daily if they're going through something whether good or bad, or sometimes weekly, depending on the kind of support they need. Um, but we try to create an environment where founders can be vulnerable with us, um, so that we can quickly address anything that needs to be addressed, and not make the founders feel like they only have to share the good news with us. So there are opportunities in the weaknesses itself, but only if we create an environment where we allow founders to share with us, will we be able to address things. And usually for us as VCs, we have a lot of access to a lot of things, whether it be extra capital, co-investors, relationships with regulators or advisors, or just data across our portfolio into expansion, and methods into reducing CAC, and access to talent as well.
Yeah, I remember a long time ago working for a really smart finance guy, and he was like, "Always tell the bad news first. Tell the bad news," he said, "and save the good news." He said, "Save the good news for when you need it." He said, "But always tell the bad news right up front." So
Yeah.
that was really good advice. Now, you were saying, I think we were talking offline, you were saying that you didn't do the deal, but Launch Africa has done esports investments with an organization I think called Skirmish. Is that right?
Yeah, yeah. My colleague Kartik led an investment into Skirmish.
What do you think? What was attractive? And not to get any details about Skirmish in particular, but the industry. Why was getting involved in gaming attractive for Launch Africa, do you think?
Yeah, so we are trying to invest in innovative technology, and we are trying to diversify out of it. Like many VCs, the largest sector in our portfolio overwhelmingly is fintech. And we are trying to look into creative ways we look at. So we have invested in a couple of media companies, like AMP, or Limitless Studios, that does animations, and now we have gaming. So for us, it feels like a natural kind of evolution in the portfolio to have a gaming startup. But there are also now some healthy precedents for gaming in Africa with Carry First, who has recently closed a major round with really good investors as well. The other thing is that Kartik on our team, he's a gamer, and when he found it, he was just excited about it himself. So I game as well. I play FIFA and I play Rocket League, and I'm looking at the startup and I'm like, I would actually use this. I would quite enjoy it. I think that's how it started. Is that we have a couple gamers on our team, and one of them noticed the startup, and just said, I think I'd use this, so I'd want to look into it. And then we ended up investing in Skirmish.
So people aren't as excited about health tech or fintech, but when it comes to gaming, it's like the passion can kind of come through a little bit.
Yeah. I mean, everything has their moment under the sun, right? It's a very fast moving industry, where favorites and less favorites, get picked up and dropped quite often. Last year you'd see a lot of startups doing BNPL, buy now, pay later, and it was kind of their moment under the sun, and now that's starting to fade away a little bit. Um, yeah. Same with crypto, same with, and so yeah. I mean, I think gaming will have its time. It's a very large market that is not very much addressed, especially here in Africa.
And gaming is probably something that also is able to scale when you're talking about wanting to come into investments that can go big places.
Yeah. I think gaming, has the ability to scale. There are going to be some challenges around its scaling, some infrastructural challenges. Online gaming requires quite the bandwidth, that is not present in a lot of places, in Africa. But that is starting to change, in real time right now. So I think it will become easier and easier to scale gaming as time goes forward.
Yeah, and that kind of leads us to the next section. I want to talk a little bit about, in the short time that we have, talking about Africa in particular, because Launch Africa is just doing such great things in a very specific market out there. And are you the largest VC in that's specializing in Africa?
I well, I think if to measure the size of a firm, usually it's by kind of assets under management. So the late stage investors will have the most assets under management just because they're in an investment sphere. So as early stage investors, I think we are one of the largest. But if we look at it in terms of amount of deals done, and our check size is around up to $300,000 with an average of 250. It's a good size check. It's a healthy size check from VC on the continent. And in numbers of deal, we are the largest. So we have the largest portfolio by number of startups count.
Could you talk a little bit about the difference between, because you're talking about you're pan Africa, you're all over Africa. Could you talk a
Yeah.
little bit about how Launch Africa looks at North Africa versus Sub-Saharan Africa versus South Africa?
Well, we don't look at it any differently. So they can be a
That's
little bit
part of it.
different
That's a good answer
markets.
right there. Yeah.
Yeah. We try not to look at it very differently, and we try not to assume that the startups there will take any expansion route. That's the usual. So sometimes, North African startups from Egypt, the expectation usually is that they will expand into the GCC, into Saudi Arabia, into the UAE, so on and so forth. Similar thing with Tunisia and Morocco, but they also, can have the ability to expand north into Europe. But we don't make that assumption. We have some Tunisian startups that, from day one, they want to expand into sub-Saharan Africa. And these are kind of some of the startup profiles that are not usual on the continent, but we like to back them first, as they don't usually get the attention, but, very valid and promising startups. The markets can differ a little bit, the consumer profile in terms of regulation. Um, and culture. So for myself, so I'm a venture partner in the fund, and my main responsibility in investing, I'd say maybe around 80% is just North Africa. I'm a native speaker of Arabic, and I understand the culture a little bit, and it can impact things like in fintech, for example, in the Muslim world to be Sharia compliant. We don't do interest rates. It's something that we just don't do interest rates. And that often sounds unusual to investors who are not quite familiar with it. Looking at fintech, and if you're targeting a certain population that is majorly Muslims, you don't want to have interest rates in there, and other things that make it Sharia compliant. So they do differ a little bit, but we try not to look. We try to keep a Pan African lens.
No, that's good. So, what would you say if you were telling people about what are the challenges of doing VC um, investing in Africa versus here in the U.S. or in Europe or in one of the other markets out there? What do you think the challenges are there that you work against?
hmm Yeah, I mean, so for us, we like the frontier markets, and we like going into new countries outside of the Big Four. Um, Going into these markets, it's a little harder to find co-investors to close the rounds with. Thankfully, we've been able to do fine, but we do recognize that it takes a little bit more effort as compared to what I would assume in the West is maybe a little easier journey. But on the same side, it also changes our ecosystem a little bit. Whereas maybe in the West, there's a lot of competition for deals, and that kind of can lead into a little bit of toxicity in the ecosystem. Whereas for us, there's not enough investors for the kind of pipeline of startups that there is, and so it leads for a more collaborative deal making space. Where we're saying, "Hey, we found this amazing startup. I can't wait to share it with you," and really anyone who's interested, and then we can decide who goes into this round. So it does make it a little bit more collaborative, but definitely there's more space for investors to be coming on.
Hey, that's great. I want to wrap up here so we don't take your whole morning there, my whole night here. But hey, Mohammed, really appreciate you taking a little bit of time here to talk about investing, especially investing in Africa, and particularly where you're starting to branch out into gaming. I mean, there's all kinds of people that are interested in uh, in knowing more about that. So where can people find you online?
You can find me on LinkedIn. You can also find me offline at a lot of the tech conferences that are happening around. Um, and yeah, I mean, there's a lot of virtual events that go on as well that I attend. Um, I try to be on Twitter, but it's not it's not as natural for me. But you can find me on there as well.
Do they get a special deal if they say they found you on Gamers Change Lives podcast?
They'll get a high five and a pat on the back.
That's all we're asking for. Hey, again, appreciate your time. This is the Gamers Change Lives podcast, season 2. Follow the money. Thanks, Mohamed. We'll talk to you again.
Thank you. My pleasure. Bye bye.